If you're looking to invest into an apartment right now, you're taking on 3 unnecessary but potentially crippling risks. Number 1, you've probably read about or heard about the structural issues that some of the high-rise towers in Sydney and Melbourne have had. Now, we know that doesn't apply to all the towers, but I believe you're going to see this issue be more prevalent than it ever has been. You're going to see more towers have these sorts of issues, primarily because of the massive building boom we had in Sydney and Melbourne between sort of 2012 to 2017, and they're still building anyway. So you really need to be careful. If you're looking to buy a unit in a high-rise building, have you done your research? Are you totally confident that it's structurally sound? Yes, I know the majority are, but you don't want to be in that tiny minority that have taken an unnecessary risk. Number 2, you're going to have a lot of cash flow problems in 2 ways. Number 1, when you buy into a unit building, you have, first of all, your strata costs, and these are not in your control. So even though initially when you buy a unit and you might do your numbers and it might seem like, oh, look, the unit's giving me a higher yield and oh, look, it all looks great and the strata costs are bearable right now. Remember, strata costs are not in your control. They can be increased fairly frequently and you really don't get much of a say. And I've seen too many people who bought high-rise units over the years, and they come to me and they're like, we bought this thing as supposed to be a high-yielding properties because we thought that units had higher yield than houses. But even if that's true, when you take the strata costs or body corporate fees into account, the net return on a unit from a cash flow perspective often ended up being worse than a house. So make sure you understand that when you're buying into a unit building, there are certain things that you cannot control and it can really eat into your cash flow. And the second way you're taking a risk when it comes to your cash flow is right now we know that the unit market is oversupplied in Sydney, Melbourne, and to a certain degree Brisbane as well. In fact, I spoke to someone recently. She was looking to rent a property in Chatswood, I think it was, and she found a unit that had been on the market for 4 weeks. So for 4 weeks, the poor landlord had not been able to rent the property out, and she was able to negotiate an $80 a week drop in rent. Right? Yes, good for her, fantastic. But if you're the landlord, if you're the property investor and you've bought a unit and you're seeing your rents going down, how good is that going to be for your cash flow? Sure, we're seeing interest rates dropping, which may mitigate that, but you never really want to be buying into a market where rents are dropping right now. It's going to hurt your cash flow, but also from a capital growth perspective, it's going to hinder your potential for capital growth as well. Why? Because the reason why there's such a high vacancy rate, especially in the unit market, is because there's oversupply. There's greater supply than demand. You need that equation to be reversed. You need to be buying into markets where there is greater demand than supply. So the cash flow risks right now, not only do they affect you on an ongoing basis from a cash flow perspective, but they also affect your capital growth potential. And then number 3, and this really applies to those of you who are thinking about maybe buying an off-the-plan unit, because I know that there are many out there who will say, oh, look, get an off-the-plan unit. You don't have to get your finance now. You can get it in 2 or 3 years' time. Just got to put in your deposit now. You don't have to worry about everything, or worry about anything rather. But the challenge is that, number 1, you don't know if you can get your finance approved. That's always risky because you're giving your deposit, whether it's your 10% deposit or whatever the arrangement is. And then if you can't get your loan approved, you could potentially lose your deposit. Now, you could fail to get your loan approved for a couple of reasons. Number 1, it could be that you just don't have the borrowing capacity. Number 2, your circumstances could change. So you may qualify today, but maybe in 3 years' time when that unit comes online, you don't qualify anymore, maybe because you've changed jobs or whatever the situation happens to be, and now you're in a pickle. Or number 3, and this has been the big thing that we've seen in Sydney and Melbourne and even Brisbane for the last few years, the last couple of years especially, is banks change their lending criteria. So you may, for example, qualify for that $700,000 inner city unit today, but in 3 years' time, there's no guarantees because they look at you differently. Or they think that the value of the property has fallen in value. So they may say, yes, you qualify for 80% of $700,000, for example. But in 3 years' time, they think, no, look, we only think that unit's now worth $650,000. And so you're only going to get 80% of $650,000. But hold on, your purchase price, your contract says $700, so $700 less $650 is $50,000. You've now got to come up with that $50,000. And that's happened more. For example, I recently spoke to a lady. She'd bought a unit in, I think it was Green Square, if I remember correctly. It was 1.23 million, thereabout. She put in a $123,000 deposit, a 10% deposit. And yet, when she went to settle on the property and when it was completed, so some 2 or 3 years later, the bank valued it at under $1 million, say 950, 960. So she had to come up with a difference between the 960 and the 1.23 million. She didn't have the money, and most people don't. So what was the only option she had? She had to walk away and she had to lose $123,000. Right? That has happened and it will happen again. So if you're looking to buy into those high-rise units, be careful about buying anything off the plan. Try and buy something already completed. Don't get swayed or convinced by the glossy brochures and the great pictures that people paint for you. Understand that at the moment, the apartment market has a lot of risks associated with lending criteria, structural issues, and cash flow. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a free half-hour phone consult with me personally. Either way, thanks again for watching.